So usually there's this perception that multi-asset is just about two asset classes, which is either equity or it is gold. So how do you view, multi-asset when you are talking about shifting from one asset class to the other asset class? Uh, how do you pay attention to all the three asset classes, when the right time comes?
See, firstly, this concept of seeing equity as one block itself is wrong, because in equity you have got different styles you can bring in. You have the value school, you have the growth school, you have even momentum, and then you have sectoral, you have thematic. There are so many approaches. Uh, you can actually give specific allocations to equity under different approaches and build a overall equity strategy. So that equity strategy can be far more sophisticated than how people are seeing it today. People say equity has one monolithic block. I don't. Because the risk appetite of the investor may be lower, then you have to actually create an equity approach which is moderate risk appetite, and yet it has the capacity to deliver. I mean, you have to take lower risk and still deliver better returns, right? So, the sophistication that equity demands is of a higher order than people understand. Now, let us go to the other thing, gold. You can't own gold all the time also, in the sense to a high
Mhm.
allocation. You can have a high allocation when there is a very strategic need, and the rest of the time your allocation can be just tactical, which means your position will be moderate, it will be there, but like it won't be impactful. So gold need not be impactful at all times, right? You can't always bat on the front foot with gold. There are sometimes when you should actually step back. I think that again, looking at just gold is a flaw. I think you have to also look at silver along with gold. So when you look at both, sometimes when you're not comfortable with gold, you can go overweight on silver. That gives you some degree of flexibility. And silver is probably a little bit more uh, predictable than gold, because its user cases are now becoming stronger and stronger. The real king in this is actually debt. We are thinking that debt is not needed because of taxation. That's wrong. That's totally wrong. There will be years when debt will replace both equity and gold and hold fort for a period of time when you should not be invested in either. That is the next point. And I think we are still exploring other options of predictable regular income like REITs, InvITs. We are yet to get into all that. ETFs in debt. We are yet to see all that. All this simply because of our taxation biases. I think we should get out of that. And again, bond investing is something that we have not taken seriously for whatever reason. I think that that is again something that we will need to take seriously. See, we think that if the returns become low, you don't need to invest in bonds. But that's not how uh, you see it. You look at the relative safety of the asset uh, over periods of time when safety in other asset classes are not adequate. So, I think that we are yet to see this approach holistically, and there are far more nuances than we see. This is not a swing between equity and gold all the time, right? And
Mhm.
equity you just see as one monolithic block, gold another monolithic block, and you just shift capital between these two as some kind of a tactical scale. You move like you move a scale, no? You move between 40, 50, 60, it's not like that. There's a lot of risk management nuance that you can bring into this, and there's a lot of sophistication you can bring in risk management, and all this contributes to investor ownership experience. It will be very comfortable when investors own. The market will go down and nothing will happen. And sometimes the market will go down and your portfolio will actually go the other way. And that's something that people have not even thought about. And when you do it in a RIA, the measurement won't be so accurate You won't be able to demonstrate that. When you do it in a PMS, you are able to demonstrate, you are able to show, look, you can do better with this approach. Like last year, I know uh, socially we obsess about just one or two fund schemes which have done well. The year is over, let your final numbers of multi-asset for that year come, you would have beaten that scheme by 300, 400 basis points. Imagine a multi-asset scheme beating the best performing equity scheme by 300, 400 basis points, right?